Hey everyone, Eric Hatch with Century 21 coming from beautiful Sierra Foothills. Hey, just want to share the August market update with you. But before that, I wanted to introduce you to these QR codes right here. Please, at the square one, this one actually attaches to all my social media. You can get my emails to YouTube channels to everywhere on Facebook. So let's become friends and subscribe to those channels. And then this circle one goes to my website where you're able to check out some awesome homes and set yourself up on some drips of getting some properties. So guys, before we start, I want to share a couple things. Three things that people keep asking me, and it's really the same stuff that happened last month as well. So we got new updated version, new updated slides from the people that the powers to be, I guess. So what we've got here is that people are asking me, what is the market doing currently right now? Is there going to be a crash? And number three, what is the market going to do from now to the end of the year? So let's get into it and break this down. So what we've got here is what's happening in the current market, housing market. And I love this graph right here because, guys, we can see this. And now that we add a month at a time, you can kind of see some trends that are happening. And here's the interest rate. Yeah, 1.6. I would love to go back and buy another house at 3.2% interest. And the same time, there are people who actually in the last several weeks locked themselves into 5.78, 5.51. And now if they feel like they want to do it, they can actually refinance. And so that's what's kind of fun about this business is that if you happen to buy a house today and the interest rates go down, refinance. If you buy a house today and you've got a 4.9 and the interest rates go up to 6, you're going to be really grateful, calling me and going, thank you so much for encouraging me to purchase a house. So right now what we're seeing right here is that these interest rates are stabilizing and they're coming down a little bit. So I really like that. And so we're going to share this because people are asking me right now is like, are we in a recession yet? Guys, I was watching CNBC. There's just so much news going on. There's so much negative news. There's positive news. They're saying maybe the recession, we're in it. Maybe the recession's coming late next year, early next year. So, where are we at? All we basically know here is recession basically just states that there's usually a 2 months of decline in regards to GDP. Now check out the stock market, guys. The stock market seems like it's like picking up and there's a huge boost right now. And then there's somebody will turn on there later and say, well, it's going to be, the market could crash still on the stock market. So there's just all sorts of news. So let's keep diving in and seeing if we can actually decipher something here. So you can see right here that the GDP, number of consecutive negative quarters, and these were all of the recessions that we kind of went through. And you could see that once we had 2 quarters, 3 quarters, 2 quarters, there's a 4-quarter one in a row, and then recessions did follow behind it. So here we are, quarter 1, quarter 2, we've actually had some negative numbers. So what's going to be happening and when is it going to happen and how long will it actually be? Is there a recession around the corner? And this was interesting here because the percentage of these economists surveyed back in July of 2021, they felt that there was only about 12% of people thought maybe there might be a recession in the near future. And now you look in July 2022 that they're feeling like half of them feel like, yeah, we probably are going to be seeing some type of recession, some kind of a change in our economy and stuff on that nature. So again, then the question is for us in the real estate market is how would the housing be impacted by a recession? And so let's dive into that. I shared this graph a couple months ago as well. The recession does not mean that there are falling prices. Only 2 of the last 5 recessions did we actually have a negative price of appreciation in our values of our property. And the other 3 here, you guys, you can see that we're 6%, 6.6%. There's been appreciation during recession. Just because we have a recession doesn't mean that we're going to be losing money on our homes. So let's take a look at this. I love this graph right here that I remember when my dad came back and he secured a loan for 18% on a condominium complex down in Auburn in the 1970s and 79, 80s, and there it is. And so now look what's interest rates of most of us that we've lived somewhere around this range, buying properties at 6%, 3%. This is just kind of free money in my personal opinion down here. But what you can see though, is you can see after every recession that we've gone through, the interest rates have come down. And so now we've had this little spike. Let's see what happens with any potential recession. And then maybe that would follow suit. No guarantee that they will come down, but that projectively that they seem to have done that. And maybe we're already starting to see that uptick from a downtick from a few slides ago. Over the past 5 recessions, mortgage rates have fallen an average of 1.8% points from the peak seen during that recession to the trough. And in many cases, they continue to fall after the fact as it takes some time to turn things around, even when the recession is technically over. So I like that with Fortune magazine. So the question is that why, the second question is why the housing market just won't crash like we saw several years ago in the 2008 market. And this is a fun graph to look at this too, is that not enough homes for sale. So you guys look at this. Now we can see down here on the green bar that the graph and it's ticking up. You can see that we've got this percentage here that the inventory is picking up, but look where this was at the 8.3, 9.4, 10 million houses on the market during this period of time. So our inventory, are we going to spike up to 8.3? That could be a concern with kind of what's kind of transpiring, but we just don't see it because the housing market is still a strong seller market. We're going to share a couple slides because look at this right here, straight across the board, we're still below that number, guys. And so this just the inventory is on the light side and it's ticking up a little bit. But let's share a little bit about what's happening with new residential construction. We have a few developments that are around in Auburn and Grass Valley in both counties here, but you can see that the building permits actually in June, they're starting to pull less building permits nationwide. Housing starts, they're going less. Under construction end period to housing units completed, you can see that they're starting to tick down the trend because they're kind of seeing that maybe the supply isn't quite there. So we're still blessed that in the last several years, this is the best and most brand new construction that we've actually been able to have in the last several years, which has been great to be able to fulfill that need. But you can see that maybe that now they are actually pulling back on some of the starts. So that actually is going to affect us, that another reason why we just don't see that this huge crash is going to happen with the real estate market just crashing. And you can see that the data, historical data, and I love this on the lending. Look at this back here of 2000, 2008. They've tightened down the requirements to get actually property. Back here, pretty much anyone could have bought a property. And so there was all these properties selling and boom, they just weren't qualified to purchase it. And so now you can see right here, coming through June 2022, we've got some tightened down the lending industry to be able to make sure that they actually follow and approve people is really what basically standard point. So that's another third reason why we just don't see it be crashing. And then the number four is really about because of the foreclosure activity. A lot of people keep telling me, Eric, when are the foreclosures coming? Eric, when's this going to be happening? You guys got to remember in 2008, the banks got all bailed out by the government. So in my personal opinion is that they maybe not have been caring too much about, let's just take the government money and sell these properties, 40%, 50% under value, get rid of our inventory, and then kind of start over. So it gave the impression to a lot of buyers that, boy, if I get a foreclosure, I'm going to be sitting really pretty because I could just fix it, I could resell it. But that's not really the case, because right now you only have 151,000 foreclosures that basically took place so far in 2021. So you can see this is kind of dripping way down compared to what we had, the 3 million people into foreclosure. And let me share this right here on this next graph that I really like. And that's because people who were in forbearance, people with COVID saying, hey, I need to make some kind of change. And what's so nice and what the situation that we're in now, back in maybe in 2008, 2007, we didn't really have that. People were just getting foreclosed on and getting short sailed. And here people are with the COVID situation is that they were able to go in and talk to their lender and say, guys, can I make some kind of additional monthly payment? Hey, can I modify something, please? Can I do something with my loan and defer a couple payments towards the end just because of the country basically shutting down? So you can see that 36% were paid in full, 45% worked out the repayment plans, and 18.4% still are in trouble there, but it's so much less than what it was. So again, guys, these people will probably eventually come into these other different categories. And yes, there will be a few homes, unfortunately, that they're unable to make that payment or unable to make some type of negotiation with their lender to come out and be into foreclosure. But you have to realize these banks aren't getting bailed out. So what they're going to do is they're going to get an appraisal. I've sold many bank repos before. They're going to call me up and say, Eric, can you go out and look at what's called a broker price opinion and give me an opinion of value? I'm going to give them an opinion of value and say it's $500,000. And maybe it's a little bit less, maybe it's at the value. And so these bank repos aren't going to be flooding the market at a substantially low amount of a price point. So that's a great graph to look at. Foreclosure activity across the United States continues its slow, steady climb back to pre-pandemic levels in the first half of 2022. While overall foreclosure activity is still running significantly below historic averages, the dramatic increase in foreclosure starts suggests that we may be back to normal levels by sometime in 2023. And that was the gentleman there named Rick Sharga. Month inventory. So this is another thing that's kind of happening right here that people will go, hey, is it a buyer's market yet? Hey, can I buy a house? Where am I at? I want to just share with you guys, the neutral market is around 6 to 7 months worth of supply. And so we're still way below that. We're around the 3 months or a little bit 3 months supply here. And so of inventory, which basically means that if no other inventory comes on the market, and we just to take all the existing inventory we have now and sell it all off, would take about 3 months of that sale process to basically sell all that inventory. So 2010, guys, we were at a 12-month inventory. This was such the buyer market right through here, and they were, it was crazy. So again, a neutral market. So we're been in a seller's market. I would consider it maybe not a hot seller market, but maybe a warm seller market. And I'm going to show you a little bit about what's going on for the rest of 2022. So our third thing here, guys, what's going to be going on? What's going to happen in the rest of the year? And let's check this out. So we've got the mortgage rate projections, and these are people, Freddie Mac, Fannie Mae, MBA, NER. We track all of these people and these individual companies and organizations, and their average for all four in the 2022 fourth quarter is that they feel that the average of the interest rate is going to be about 5.33 all the way down in the third quarter. Right now, it's where it is actually at, starting at 2022 at the 4.9 is where we're at currently, but they're feeling that it would be about 5.33 and 23, 5.20, 5.1, and then maybe the third quarter of 2023, the 4.97. So that's great news that it looks like that they're stabilizing, that these companies and these institutions feel that they are going to be staying about where they need to be. So I love that statistic right there, that we're not going to be shooting up and getting a little bit crazy on that. Now, of course, the economy, things could totally change that. There could be a potential silver lining on the market. He added a stabilization in the mortgage rates and rising inventory may bring some buyers back to the market during the second half of the year. I already see it. I already see a bunch of buyers calling me going, hey, I'm interested in buying. There's people still moving into California. Most of us think that people are moving out. There are people moving into California. And there are people who are staying in California and buying houses because they feel right now that it's a great time to buy. And I'll share kind of why. So here's the home price forecast for 2022 that we've got. Interesting here that you look at all again, the average forecast feel that in 2022 that we're going to have about a 10.3% appreciation in our in the year of 2022. And I know that we were 15 to 18 to 19% the last 2 years that were kind of crazy, but we're again getting back to a normal market, which I believe might be my next slide, but coming close. I don't think national housing prices will decline in a meaningful way, but there will be some price declines across the country. So there are certain pocket areas that we have in our local areas of Placer and Nevada County that seem like the prices are going down, and but I will tell you right now, the houses that have been on the market a long time, yes, those prices are coming down because they priced their homes too high in the beginning. So here we got this chief economist of Moody's analysis on that one. The existing home sales seasonally adjust rate in the millions. So this is what they're suggesting or feeling that we will be on target for the rest of the year to sell about 5 million houses. And you can see that we were way high the last 2 years, which are 2 years that we've never even seen before, and similar years. But you can see that now we're getting just back to the average of right there straight across at that about a 5 million homes. So this was interesting to see on the forecast from January to July with Freddie Mac, Fannie Mae. And you can see that they were thinking we were going to have about 6.9 in January, 6.8. So they were all about same. And now they've dropped that of their analysis of where they think that we're going to be going and getting for the rest of the year on the sales. So I want to share this with you guys. This is kind of a fun graphic to kind of see 3 reasons to buy a home today. And here they are. Fewer multiple offer scenarios. In April, you can see right here, we had 5.5 offers, average of 5.5 offers per sale of a house when it came on the market. In May, it was 4.2. June, it's 3.4. And so it'll be interesting to see that we see a decline starting to happen there. And some of you sellers are going, well, I didn't get my multiple offers. And some of you buyers or sellers are going, wow, I got 6 or 7. So this is basically an average throughout the country. But you can see fewer homes selling above asking price. So we had 61% back in April, all the way down to June that were 51%. So they're still selling. And again, this is an average because one house could sell for $2,000, $3,000 under, and the other one could get maybe 15 to 20 grand over in a different area. And so that kind of like makes it about the 51%. And so I like this one right here. Supply of homes for sale is growing. So we are getting that supply back into normalcy is what we're basically getting. So I really feel, guys, that the 4.9% interest rate right now in the month of August is a great interest rate. May not be the best interest rate that we've ever seen, but it's certainly better than we've had in the past. You've got less competition, you have more inventory, so it's a great time to buy. As I mentioned before, if the interest rates tick up, you'll be really happy that you purchased. If they go back down, then you can just call your lender and refinance. So great graphic to see here, guys. So I hope you enjoyed that one there as well. Hey, I wanted to share as we wrap things up here, we've got our fall buyer and seller guides coming out. So if you'd like to have one, just DM me, send me an email, let me know. We'd be happy to send this over to you. It's a digital format, so we're excited about that. I hope you guys enjoyed the August market update. Be positive, stay positive. It's a great time to live. It's a great time. Our country's fabulous. We have a wonderful country, and we just need to be the best people that we can be every single day. All right, guys, I'll talk soon. Take care.